All right, what's up, tycoons? Super excited for today's video. Going to give you guys an update on OriginTrail, okay, ticker symbol TRAC. And we're going to look at the daily chart, okay? We're going to go over the demand zones below, the supply zones above. We're going to look at the chart patterns, and we're also going to go over the key support levels and why those are the key support levels, okay? After that, we'll take a look at our MACD and our relative strength index. We'll look at the signals that are there and any potential signals for the next move. All right. So all I need you guys to do is smash the like button, subscribe to the channel if you're new, because I'm dropping videos like this every single week. And this one was a viewer request. I do viewer requests every single week as well. Okay. I'll be uploading anywhere from 5 to 15 videos a week. And if you want one of your videos to be included in that, make sure to let me know what ticker you would like in the comment section below. All right, so first off, we're going to explain supply and demand zones, right? So we have a demand zone down here, right? This is an area where previously the chart has shown to be a demand imbalance. A demand imbalance simply just means that there is more buy orders. There's an imbalance of buy orders in this range that pushes the price higher, right? So what is our demand zone? It's 0.172, okay, all the way down to 0.147, right? We can see in the past here, over here to the left, right? This is where we ended up bouncing and finding demand. We came down, dipped back into it again, and came up, all right? Now we've come over after establishing this supply zone up above where the price action has been pushed down and there's a supply imbalance, meaning that there's more sell orders, right? There's an imbalance of sell orders that's going to drive the price lower. We came back into our demand zone. All right, and we got a very nice bounce and we're continuing upwards. We're really trying to head back into this overhead supply zone. And that target, the price levels on that is going to be 0.243 all the way up to about, what is that right there? Sorry, 0.271. Okay. So that's our overhead supply zone. The signals that we have currently, or that we got, all right, was if we take a look at this trend line here, notice how the price of this token is basically essentially remaining flat. All right. But if we look at the relative strength index down here, okay, the RSI, it's going to show you the strength of a token at its given price level. Well, it's remaining flat. The token is staying flat, not really going anywhere in price, but the relative strength index is making a low, a higher low, and a higher low, right? So these three times that where we, are just trading right in this range, remaining consistent on the price, the relative strength is actually going up. So that's what's known as a bullish divergence. It's an indicator that you may see some bullish activity in the future. If we look right here on our MACD, okay, a buy signal on the MACD is going to be this blue line crossing above the orange line. So let's look at those two spots right here. So we have a low, we have a higher low on our relative strength index. We have a low, we have an equal low, right? And then we have the MACD curling up at the same time. So that's two signals for possible entry to get into this play, right? And we can take a look if you would have got in on that signal. Okay, that was a 25% move to the upside. And if you're still holding through that, it's a 41% move, right? So the best thing to do is to give yourself an edge in the market. And to do that, you need to, bring as many weapons as you can, okay? Because investing in trading is like going to battle. It's like going to war. You can't bring a knife to a gunfight. You have to bring as many weapons as possible. And when you can combine things, that's really going to give you an advantage. Now, what do I mean by combine things? Well, first thing, right? First is our demand zone. We know that we have this demand imbalance here. We know that this is an area of interest. We don't really want to take trades in here because this is what I like to call no man's land, right? This is an area of the chart where, there's not imbalances, right? We have imbalances established here and here. These are areas of interest, right? That's your first thing. So we're in our area of interest, and then that's our first signal, right? Then we got bullish divergence. Then we got the MACD buy signal. So now that's three things combined together that you can really use to give yourself more confidence in the play, right? Versus just buying blindly and hoping that it goes up because you think that the hype is real, or whatever. Maybe you're like, okay, well, it looks good here. And you buy and then you see it pull back down and you sell and you panic, right? If you entered into your demand zone, then it's really going to skew the risk to reward in your favor, right? What I mean by that is if you're coming down here and buying at this level, right? You're looking to, risk or as your reward, you're looking for about 47% all the way up to 64% on this trade, right? And if you look at your risk, okay, you're going to risk if you want to put a stop loss at the bottom of your demand zone, that's going to be about a 10% or 11% risk. And you can even put a, stop loss just below there, right? Let's say even 15%. So you can risk 15% to earn 40% or 60%, right? Those are really good odds. Those are much better odds than, just buying in at 20 cents and hoping it goes up to 22. And then what do you do if it comes back all the way down to 17 or 16, right? The next thing we're going to look at is going to be this chart pattern, right? So that's another thing that you can use to give yourself an edge, right? We have a bearish chart pattern forming right here, known as a rising wedge, indicated by these two trend lines. If we come down here and break this trend line, all right, we can expect to see a sharp move to the downside, most likely back into our demand zone, okay? Now, these three support levels, all right, I got these using the fib, okay? I have a whole tutorial on how I use the fibs and the different ways that you can use them. But basically, about 70% of all trading throughout cryptocurrency and even the stock market is done by algorithms, right? So you have to start thinking like an algorithm. And one way that you can do that, all right, besides using supply and demand zones, is you can use the fibs to give you mathematical formulas on where support or where resistance is going to be. So in doing so, what we've done is we've basically just taken the swing low over here, right? And we've connected it to the swing high right here. Now, nothing moves straight up or straight down. What it's going to do is it's going to retrace and continue the move, or it's going to break those retracement levels and try to reverse. So what we're looking for is we're going to look to see, okay, well, if we head up here, are we going to retrace to one of these three levels and then push back up higher into our overhead supply zone? Those are our targets, right, on this trade. The reason we use the 38.2, the 50%, and the 61.8% is because if you bounce off of the 38.2, it signifies that you're in a strong uptrend, right? So if we look here, we still have room to drop, all right, within this pattern and bounce off of the 38.2 and show ourselves that we're in a strong uptrend. All right. If we, break below there, we have the 50% level, okay, which is kind of just going to be your like neutral retracement level, right? And then the 61.8 is going to be your golden ratio, right? So because we have a bearish chart pattern, we could see the price come down, but we could have a fake out, right? Not every pattern is going to play 100%. So we have the 61.8 here to see, okay, well, maybe we break this trend line, get a look below and fail, and then continue the push up higher. If we break these three levels as support on the next retracement, then that's when, as I said, you can expect it to come back down and test this demand zone again. Now, just because we have a bearish chart pattern on here, it hasn't played out yet, right? It's still setting up. So, if we continue pushing higher, right, and let's say we make a higher high right here, it's going to turn into less of a rising wedge and more of a bullish channel, right? Like, let's say if we were to draw this trend line like this, then that's more of a bullish channel. Okay. And we're just trading healthily in this channel until we, break out of it, right? But currently it is a little bit more of a wedge. So we do have to be cautious and be prepared and know where our important bounce levels are. And if we, we break this trend line and we break those levels, we know that it's going to be, basically a sell signal, right? Now, another thing you can look for is the MACD for a sell signal. So just as your buy signal is when the blue line crosses above the orange line. If this blue line comes down and crosses below the orange line, okay, then that can be seen as a sell signal, right? So what I think would happen, right, is you would get the break of this trend line, you would see your sell signal, and then that would be your two signals basically to sell, get out of this, short it, however you want to do it. But one thing I do want to highlight on our relative strength index is that we are above 70 currently. So if you're watching this video right now and you're wondering whether you should buy, it is never a good idea to buy when something is overbought. Overbought means that the relative strength index is over 70. Now, just because something's overbought doesn't mean it can't go higher, but it does suggest that you will see a pullback soon. Now, the move or the extent of the pullback is to be undetermined. We could just see this dip a little bit below 70 and then go back up and higher as we continue heading upwards. Okay, but I just wanted to throw that out there as well, because generally a general rule of thumb is don't buy something when it's above 70 on the RSI. Historically, it doesn't work out very well. Okay, so that's it for today's video. Appreciate you watching. Smash the like button, subscribe to the channel, and let me know what video you want me to make next on what ticker. Okay, because I do those viewer requests every week, and if you enjoyed this video, you're really going to enjoy one of these next two videos.